All right, guys. Today is on 29th of April, 29th of December 2025, the last week of 2025. It has been a very busy year. Today being on Monday, I just want to go through what has happened today and high possibility when it comes, or the high probability when it comes to the buyers on my side, on our side, that is, with me and my team. Now, of course, we are going to start with the risk on. We have a lot of things which are actually happening. I go by the name Waweru Kelvin. I'm a currency trader and a trading coach at a RatePulse market. Now, when we happen to check on the risk sentiment, you can see we have the VIX index or indicator. We say it very well. When the value is below 20, we are in the risk on, and when the value is above 20, we are in the risk off. Now, when we tend to see right now, yet the reading is currently at 14.65, which is below 20. Therefore, we are in a risk on. When we are in a risk on, US dollar tends to be doing very well, and then the gold is supposed to be dropping. The S&P 500 should be dropping. But if you happen to go to the charts, on the dollar, on the gold itself, you can actually see that gold is pushing to the overall, the general trend. We are in a very good uptrend. It's only that this candlestick, this is on the daily time frame. You can see that today's candlestick, it's quite very bearish, which is pushing the price all the way from 4,500 to now at 43.1. Now the big question is, why did this price happen to drop this massively? It's because of the geopolitical tension which is actually happening right now between US and Venezuela, and that's why gold was being rallying to the upside. But today we had a signal, like we had some easing of the tension. Again, we have a deal making, a peace deal, which is actually taking place between Russia and Ukraine, which is actually the headline which was circulating when it comes to the global market finance, our websites. Therefore, if you check very well now, if you were to trade gold, the big question is, would you consider this one as a break of structure, is a break of the resistance, and then we have a very good retest and then push to the upside? Would you consider buying, or would you still wait for fundamental divergence for you to get into a very cool buys or maybe sells? If the geopolitical tension of the US, between US and Venezuela, continues, we shall be having that price pushing to the upside. And let's say, for example, if we happen to see a lot of easing of the tension, we might also see the gold kind of pushing beyond that level. And again, when it comes to the issue about the Russia-Ukraine, if the easing or the peace deal happens to take place, we might also see a very good push to the downside when it comes to gold. Now, another thing, much important thing, we can also pay much attention to is what we call the Fed meeting, FOMC meeting, which we shall be having it tomorrow on Tuesday, on 30th of December. We shall be having the FOMC meeting at around tomorrow. That is now tomorrow in the evening. Therefore, if the FOMC meeting comes out, and then if the FOMC tends to be very hawkish, if it turns out to be very hawkish, we shall be having gold keeping dropping to the downside, and therefore this one will be considered as a fake breakout. And let's say, for example, if you are going to have a FOMC meeting and then it turns out to be very dovish, we can still have that push being a very good retest, and then we can see the price pushing to the upside. Remember, this one is not a financial advice. You should always consider your own analysis and also consulting qualified professionals based on investment. Remember, trading is a very high risky game, and that's a game of probability. It's a business of probability, and then you can lose a lot of money if not well calculated and well not traded. Now that is on gold. Let's check on silver. It is doing the same thing. It made the all-time highs around $84. Therefore, the push below this one is because of the easing, as usual. It's because of the easing geopolitical tension between US and Venezuela, and also the peace deal making between Russia and Ukraine. Therefore, that's why we had that push to the downside today. The same thing happens if we are going to have FOMC tomorrow coming out and being very hawkish on the dollar. We shall be having silver continuation to the downside, and then maybe you can wait for the very good retest around that zone, and then you consider going to the downside. Unfortunately, if we shall be having Fed coming out very hawkish, very dovish on the dollar, we shall be having that price continuation to the upside. And again, before you take that before you execute that trade, you should also consider the geopolitical tension which is within the global, which is taking place between US and Venezuela, and also the Ukraine, Russia and Ukraine peace deal, which is being kinda proposed, or maybe kinda pushed. Agenda is being pushed by Trump. Now you should consider that. Now, when it comes to S&P, we have the same thing. If you happen to see, all this information is shared among or across my social media platforms. You can see now we have this one. You can see all these thing. It's now you can see on gold. On gold, it's being shared there. I shared every setup that we had today, and we still have on the Twitter. You can still check on the Twitter, my official Twitter. I go by the name Waweru Kelvin, and I'm a currency trader and also a trading coach. I shared this one, and it was very simple. You can see S&P is making all-time highs, like it's making a very push to the upside. Unfortunately, when it comes to, it has already started consolidating into this zone. Now the question is, it is always speculated that you should be looking to sell when it comes to the resistance, and then set your stop loss above here. Now the big question is this one a real kinda a very good sell opportunity, or maybe this one can maybe it's either a trap? You only have to consider the geopolitical tension and also the vibe that the FOMC data will be coming out. Let's go to the currencies. Today I've been looking very quite much like I have much interest on the Euro USD on the daily time frame. We can see we have that kind of a demand zone here. We have that demand zone here, and also we have that zone here, and then we have this zone around here, which is a very good resistance support, and also you can mark that zone to the upside, and then you can see we might also see that price coming back into that zone and probably having a very good push to the upside. Now the big question is, tomorrow we shall be having FOMC, which we shall be listening and also covering FOMC and analyzing it, whether it's dovish or hawkish. And again, we shall be having Eurozone. We shall be having what we call Spanish flash CPI, that is the year to year, and therefore that one must also contribute to the price movement. If it comes dovish, we might also have to see Euro USD pushing to the downside before FOMC, and maybe after FOMC everything we can now start aligning. If both of them comes divergence, fundamental divergence, we shall be looking for opportunities either to trade all the way from here to the upside. Remember, Euro is kind of bullish. Like my bias is bullish due to inflation, and also inflation being within the range, and also the bank of the European Central Bank being very hawkish on that, whereby they are saying that they are going to hold the interest rates, and not unless there is data which will suggest otherwise. Now on the Euro GBP, this is something. Now you can see we have everything there. if we are going to have tomorrow's Spanish CPI coming out year to year, and if the vibe will be much dovish, we might, like if it comes negative, we might see the price kinda pushing below to the upside and then getting deeper into this deeper demand zone, and then maybe we can see the move all the way from there, having to that demand zone, and then later we can push to the upside. Unfortunately, if you happen to check on the 4-hour time frame, you can see that the price is kinda into a very good consolidation zone, it's creating almost range. If you happen to go to the line graph, you can see we have that kind of a zone here, whereby we can also look, it's called accumulation. Now you can look for what we call AMD, that is accumulation, manipulation, and then distribution. So if that is now the price, if you were to trade that pair, pay much attention to the Spanish CPI, which will be coming out. Again, let's check on something else. On the Euro CHF, that is now Euro Swiss franc. It's a very much pair you can also consider, because we are still seeing it within the point of interest, whereby we have this kind of a demand zone here. Now the move all the way from here to here, if you happen to take your Fibonacci retracement, you will get the 50%, and then the price is on what we call, is in within the discount level, and we can see, or maybe we can experience the price moving to the upside. So we have to pay much attention to the Eurozone, or how the Spanish CPI year to year will come out. Now, when you happen to check on the GBP, this is one of the pairs that I'm paying much attention to. If you happen to go into the 4-hour time frame, it is quite easy. You can see that the price has been pushing to the upside, and this is because the Bank of Japan was not straightforward on the future, on anything related to future interest rates action. But today in the morning we had the Bank of Japan coming out. I shared everything on my social media. If you were to go and check, it's a very good updates. It's very good updates, which I'm kinda sharing each and every day. I don't know. Let me see whether I can get the posts. How do you navigate that? But if you were to check, you will see them. Go and check on that. Go to my official Twitter, website, Twitter account. You'll see everything there. Let's load. You can see all the posts. Kinda my network is kinda slow, but don't worry. Go and check on that official social media account. Now on this one, I'm bearish on the Japanese, on the GBP JPY. Tomorrow we don't have anything data related to Japan or to any United Kingdom economy, or maybe the Japanese Bank of Japan, anything. But today in the morning, today on Monday being on 29th or 12th, that is now December, you can check on the official websites. You can get to see we had the Bank of Japan coming out and giving the way forward, and whereby they are looking to be hiking the interest rates, and therefore gives us what we call a hawkish stance. Now the big question is, if you check on the inflation of Japan, you will come to realize that inflation has started slowing down, with the recent data recording a drop. And again, when it comes to the GDP, the same thing. When you check, it has been kinda a challenge when it comes to the gross domestic on the Japanese yen, whereby they had even to come in and maybe do stimulation of the economy, whereby they came out with the 2.3 trillion for stimulation of the economy. Based on that, we still have, again, on the Japanese yen, regardless of the Japanese yen trying or maybe observation, they have already observed that the forex market or the foreign exchange markets are not actually moving within as the fundamentals suggest, and therefore we had Takayama saying that there might be in an intervention. So this week we are paying much attention to that intervention and see how the price will actually be.